TA with MK. It's TA with MK. Welcome back to TA with MK. My name is MK. And in today's episode, we've got a little bit of everything you could ask for. We have love. Oh, Bitcoin, I love you. We have drama. Bitcoin! Bitcoin! No! We have a little bit of hopium. And we got a little bit of oh noium. If you're liking the content, please remember to leave a like and subscribe, and let's jump into it. All right, so to start out, we're gonna jump back onto the Bitcoin monthly chart. This is what I focused on in yesterday's video. And I had a few more things I wanted to point out from the bearish perspective. And then at the end, I'll offer a little bit of hopium or some of the more potential bullish things as well. Obviously, like I said yesterday, the coin can flip either way, so you want to have a plan for either case, and then just be prepared for if it hits certain levels that you're tracking to either turn bullish or bearish. The nice thing about crypto is you can make money going both ways, so the most important thing is to just have a plan in place. Now I'm going to quickly grab my paintbrush and go over what I pointed out in yesterday's video. These two white lines that I have, these are the 21 simple and exponential moving averages. And if you look on the monthly chart in previous bull runs, Bitcoin was able to stay above those, retesting them here and there, but for the most part staying above them. And then after the blow off top of 2013, and Bitcoin was slowly trending down, it tested the 21s, at least, this one here, which was the exponential one, a couple of times, and then eventually the two actually crossed each other. And then it lost them, retested it bearishly, and proceeded to dump 60% more in 2014. The blow off top in 2017 did something very similar. It had been above the 21 the whole way up. Eventually, the blow off top, it's retracing. The two cross right around October of 2018, which ironically 2014 was when the two crossed back in the previous bull run. Before that, they cross, it loses the 21s, and then it proceeds to dump 50%. Now, I also mentioned in yesterday's video that the timing of this bull run versus the previous had a lot of things that were rhyming or similarities, and I'm going to go over a couple more of those today that I've spotted in the charts. Now, one of the big things that I've noticed from a timing perspective is after the blow off top of 2013, so back here, right? Bitcoin spent 10 months above the 21 before it eventually lost it on the 11th month, right? And it did the same exact thing, ironically, in 2017 / 2018. And then it lost the 21 here, stayed under it for, a period of time, just like it did back here. Not quite as long, but very similar time frames. Eventually it regained it, used it to kind of push it up for the next bull run. One difference between this bull run so far, at least, is that we had a double top rather than just one blow off top. But from a timing perspective, in both cases, when it lost the 21, it happened around October, November, right, of that following year after the blow off top. So I put this blue line over here to indicate that, that would be kind of the time frame, if it were to follow, that we might be looking for it to potentially lose these 21s. Now, the scary part, I guess, from a bearish perspective, is that this is the third month now in a row. Well, we're barely on this month's candle. We still have 17 days left. But for the third month in a row, the 21 is acting as support. But if you look at previous bull runs or previous times it's tested it, if it doesn't catapult off of it, like it did here, boom, big move up, there's been a few times it's jumped off of it. If it hangs out there too long, it has a tendency to lose it. And we only have 2 data points to go off of, but both the previous 2 times it lost it, you had a pretty significant pullback. Now, this one was 60%. This one was only around 50. So, we wouldn't really know ahead of time what to expect. I think in yesterday's video, I put this 43% as just kind of like an average between the first and the second time. And I pointed out that, hey, that could bring us down to prices around 19 or 20K even, which a lot of people have called for. At any rate, this was all mentioned in yesterday's video. So if you are a regular watcher of my videos, I really do appreciate it. And so I won't repeat myself any more than I just did. So we're going to move on. There's a few other things that I noticed in the monthly chart that was maybe some causes for potential concern. And the two indicators we're going to focus on in today's video is the RSI and the stochastic RSI as it relates to the previous 2 bull runs and kind of where we are now. So if I double click, that's going to bring up my indicators. And the first one that I'm going to double click on and focus on is the RSI. So let's double click and make that larger. Now I'll make the assumption that the majority of my viewers have probably been in crypto for a little bit, or at least understand what the RSI is. For those of you that are brand new, just know I'll be putting out a video here in the coming week, hopefully the next 3 or 4 days, that goes over the RSI, the MACD, and the Stochastic RSI. Those are the 3 most commonly used, I think, indicators. There's a billion out there, but those are the 3 most common, and they're the 3 that I primarily trade with. So I'll put out a video that kind of goes over how each one works, and why traders use them. So in this video, I'm not going to go into depth on that. Just know that the RSI, if it's up here towards the top of its range, that is considered overbought. It means the asset could expect a pullback. Now this is used on every time frame, but of course the higher the time frame, the more emphasis or weight you would put on it. But on the flip side of that, it also means it would take more time to play out. So for example, I've indicated with these red vertical lines that in the previous 2 bull runs that the RSI actually reached close to max, which would be 100%. Reached about 96, 97 in both cases. It reached near max overbought for Bitcoin on the monthly chart, and it basically did a double top in both cases, right? And then on the other end of that, this bottom side would be the oversold, meaning that the asset is considered to be oversold, good buying time, basically. Like, think of it as the top represents caution. The asset probably needs to cool off or pull back some. The bottom means, hey, the asset's been down for quite some time. It's probably accumulating, good time to buy. Kind of as simple as that, and especially on these higher time frames. It takes longer to play out, but it really is just as simple as, hey, get down here to the bottom. There's a good chance that you're not going to nail the bottom per se, but you're getting closer to the price going up, so you might as well consider start buying. Whereas on the other side of that, if it's at the top, caution, might be time to take some profits, right? Well, one thing I noticed, obviously this bull run, it never did even reach as high on the RSI, so it never quite got, on the monthly chart that is, as overbought. However, it did top out, and then it just kind of been retracing right just underneath this. This isn't a valid trend line yet. It only has 2 touches, but it does have this kind of a trend line that's been holding it back. It hit right there, came back down, retested it. Well, one of the things that I was noticing is I like to take the RSI and chart it just like I would a regular chart with support and resistance. Key levels, right? I'm looking for key levels where the RSI reacted in some way. Well, I guess from the bearish side of things, you could see that this level I've indicated in red, now at the end of 2017, it actually bounced off this zone briefly, but then lost it, right? Then it took it forever to come around, and then it bearishly retested it, and eventually it was able to break back above it, and that began kind of the next leg up for Bitcoin. End of this bull run, kind of similar, acted as support again, this zone, bounced briefly, and then lost it, right? And then it was a little different. This one had a pump back in 2019, used this next level up as resistance, retraced, bounced again down here, and then proceeded this bull run's push up on the RSI. Well, the one thing that I've noticed on this one now is that we've lost that red zone and already bearishly retested it. So the question is, are we going to go up there and test it again, or is there a more highly likelihood that we retrace down to maybe lower levels of support first? The other 2 things I wanted to quickly point out on the RSI is that in both cases of the previous 2 bull runs, as I just mentioned, when it bounced off this red zone briefly, I marked in yellow, and we'll go back out to the regular price action in a moment and kind of look what price did from that point until the blue markers, which was when I pointed out that Bitcoin lost its 21 moving averages and then had a 50% drop in one case and a 60% in the other case. Well, both the first 2 bull runs from an RSI perspective did almost the exact same thing, right? Retested that, lost it. Well, I marked in yellow so we can check what price action was able to do for that bounce, what was the best recovery it was able to get before it hit its October plummet. And we'll compare that to kind of what we're doing now. Now, one other thing I wanted to point out, too, that we'll look at from a bullish perspective is that this next little white line down that I've indicated did act as support once. Let's see, look, where was that at? Right here, back in 2019. It did bounce there, and it had a little run up. And, and I wanted to mark and kind of point out, hey, like, what did price action do between there? And we'll mark another red line there. That's really the only point of data that we have for when they actually use that level as support. But that's where we're nearing right now. So if there's some hope that we could have at least a short-term bounce, that's kind of what I'm eyeing. Also, of course, if we want a bigger bounce, we need to get back over this red zone and retest it and head higher. So we really need the RSI to get back up over like 58 to 60. All right, I will try my dangest on this next one to not be as scribbly. Now this is the stochastic RSI, works very similar as far as from a trading perspective as the regular RSI. Anytime you're up near the top, that's considered overbought, good time to sell. Anytime you're near the bottom, that's considered good time to accumulate. It's oversold. However, with this indicator, you could spend, especially on a monthly time frame, a long time in overbought and a long time in oversold. And it doesn't mean just because you're up here at the top that the asset has topped out. It could definitely go a lot higher while it's hanging out up here. It can also go a lot lower while it's hanging out down here. Now, one thing I want to point out from the previous two bull runs is that the stochastic, as it came down and eventually reached over sold levels, it bottomed out kind of at the same spot both times, which, you know, right around a 1, right? So it bottomed out here, and then this next bull run came down, bottomed out at that same level. At least that's where it first bounced as support and then just kind of hung out, you know, sideways along that little pump over here, but not much. And then I wanted to go zoom out here in a second back to regular price action and kind of show that, hey, if we were to do something similar, because if you look right now, we're actually hitting near that level. We're at 2.29, so we can go a little lower, but we are nearing that same level of stochastic support that the previous two bull runs, you know, grounded out at. But we want to look and see, but from yellow to blue, so yellow would be it hitting that area. So let's just say that we're really close or we're going to hit it soon, right? So let's do another Alt V. Let's go over here and change it to yellow super quick. Make it 2 and then a yellow. And we want to compare that from the time that it first finds that level of severely oversold before it loses the 21, which we're not saying it will for sure do just like it did the previous two bull runs, but what was the best upward price action we got and how much more downward price action did we get? All right, so we're zoomed back out on just the price action. And at least I was up front at the beginning of the video saying that my chart was going to be messy. I just didn't get a chance to really organize all these lines. One thing that's cool about TradingView that I will show in a future video as well is that over here you can actually set up little groups of different things that you could then hide at, you know, certain times. So if you're trying to show like 10 different things on a chart, but you don't want to show them all at the same time, like I'm kind of doing right now, you can have little groups, and then you can hide, you know, that group until you actually want to display it. So that was what I would have normally have done, just didn't get a chance to do it. But anyway, so we have our yellow lines, which were represented by when the stochastic, you know, bottomed out the first time in both bull runs. And you can see that from that point, the first bull run, the highest pump we got after that was around 60%. So that's the, I guess, the bit of hopium I wanted to offer, is that there is this option or potential that it could still pump, you know, before eventually at the blue line losing the 21, right? So from the time that the stochastic bottomed out, you weren't bottomed out price. In fact, price eventually went down another 60% that first bull run, but you got a 60% pump first before it came down to that same level and then, you know, plummeted. Similar thing happened in the 2017-2018 blow off top afterwards, is that from the time of this yellow line, stochastic bottoming out, price action was around 6,000, right? It pumped really, really close, 59, you know, in fact, on the chart I have them exactly the same, but, you know, I would have had to zoom in. I'm sure it's a few percent difference, but right around 60%, again, price action pumped, you know, up to 9K again, before eventually coming back, losing the 21s, and then, you know, going down 50%. So if we do something similar this bull run, you know, especially from a time frame perspective, I put on here that what if we were to pump 59.24% again? Well, what does that look like? Well, that puts us back up here at levels around like 56K, you know. I'm not saying that we're going to pump that, you know, none of this is any sort of prediction, but there is still potential that this could have been the top, like this double top could have literally been this bull run's top, but we could still potentially see a pump back up into the 50K range, right? Before bleeding out over here. Let's say it's a similar time frame to the previous two bull runs around October. Maybe we're able to keep above the 21s clear until then, and then we drop somewhere between, you know, 40 and 50%. I guess the number one most important thing you should take away from any video I post really is that it's important to have a plan. You want to have an idea of what price action could do either direction, you know, because you can do all the TA you want in the world. But it doesn't mean you're going to be right. You know, you're in fact, most likely you're just going to have to plan on the fact that you'll be wrong at least a little bit. You know, maybe you're right that it's going to be higher in 6 months than it is today, or it's going to be lower, or this level of support is going to be a temporary bounce. You know, that's having a plan. And so what I would say is, if you look back to previous you know, history of Bitcoin, and this is on the monthly chart, so this would be more for like a macro investor of Bitcoin, right? Now there's not enough data for these 50 moving averages, the simple and the exponential moving average, to see it go way back here. But you know, you can kind of just make the assumption that this, you know, was acting as, so after it lost to 21, that the bottom, you know, in this case 60% lower, ended up being the 50 moving averages on the monthly. Those were able to hold Bitcoin up while it consolidated before it pushed back over the 21 and then proceeded to go on a good run. We'll look at, ironically, the same thing happened in the next bull run. It lost the 21s around October, November, went down 50%, 51 or 2%. Ironically, it got squeezed between the 50s and used them as support again. This lower, thinner one's my simple moving average. The exponential one's is the pinkish one. But anyway, it represented a really good buying time, right? Between $3,000 and, you know, $3,500 or $4,000. Well, this is something I think you should write down on a whiteboard, or, you know, on an Excel file on your computer. You know, set alerts for these kind of things. You know, you never know if price action's gonna just go up from here. I mean, there could be some bullish news that comes out. The 21s might hold it up for now. We might go 3 or 4 months. Maybe we do pump back up to 50 something K. And then at that point, you could take some profits and, you know, readjust your plan. But option B, which you'd want to be prepared for as well, is if we lose these 21s at some point, and we wouldn't just come plummeting down necessarily. It could be a slow bleed, but have alerts set on these moving averages, because you can see historically, anytime it's come down near these two moving averages, which they're both the same, just one's the exponential, one's the simple, that has represented the best buying times in history so far for Bitcoin. Now, there's only the 2 data points, but in the history of Bitcoin, I mean, those would have been the primo times to buy Bitcoin, right? Thank you for stopping by. I sure do hope you enjoyed your stay. If you're liking the content, you know what to do, and we'll catch you tomorrow. It's TA.